Well, we are going to welcome you to Samvat 2076 with a bang. Our Diwali offering to you comes with three very, very important people from the market. Joining me now is Manish Chokani, Raamdeo Agrawal and S. Naren of ICICI Pru AMC. Prashant is also with me to welcome all of you to this grand Diwali offering. Gentlemen, thank you very much for joining us. May I start with you, Manish? See, there is already a kind of bullishness. I mean, we have a distance from the 10,600 mark, at least 1,000 up on the Nifty. Does 2076 look like it can take this forward? Are we past the worst?
So you actually expressed it very well in the last line. I think the worst is behind us, and you always come on a Diwali show looking to be optimistic. Nobody wants to invite a bear on a Diwali show, right? So we always start the year on a optimistic note, and like we were just speaking even in the earlier shows that I've done with you, that when you go through a normal economic cycle, the bottom of the cycle is when you realize the authorities are coming and throwing everything that they can at the problem. So the government is giving you tax cuts, RBI is giving you interest rate cuts, everyone is trying to revive the economy, and all the industry associations are being heard. Prime Minister has recently gone to United States and also apparently made some commitments over there to investors and corporates to come into India. So there's no reason to believe that a lot of the pain that we kept enduring is going to continue forever. And I would think when we look back, this year 2019 would have looked like a base formation year where you certainly formed a bottom, and I don't expect a V-shaped recovery, but it certainly should be on its way up. Okay,
well, let me toss the same thing to Naren and then come back to Prashant and Raamdeo. Naren, would you agree? You know, I cut my teeth in the late 90s, and RBI was cutting rates and cutting rates. We had come down all the way from 18% PLR all the way to 8% or thereabouts by 2002. And you had a lot of money being thrown in, and the Vajpayee government doing great things like golden quadrilateral. But it took, 4-5 years for us to bottom out. Are you getting a sense that the recovery we are seeing in the market presages a recovery in the economy in a quarter or two?
Actually, it's much clearer for longer term investors that you invest when the economy is down in cheap stocks, and you actually get very good returns in the long run. And clearly, if you look at, we look at 5 indicators of the economy. One is credit growth, second is power demand, third is oil demand, fourth would be container traffic, and fifth would be auto numbers. And all these are all high frequency, good quality numbers. All of them are telling you that economy is in bad shape relatively. And therefore, the tough task for us to tell people is that when economy is in bad shape, invest in small caps. When the economy is in great shape, you will be able to make money. Or you invest in value stocks when the economy is in bad shape and you make money. I think the only difference I would say at this point of time, while the economy is in bad shape, many of the large caps or mega caps are not cheap at all. Normally what you would see is that when the economy is in bad shape, you will see the entire market being cheap. But this time you can clearly see that the mega caps are not cheap, but the rest of the markets are reasonably valued. So I think there, if you invest today for the long term, how long the economy will take to revive, that's a debate which we don't have an answer on. My belief is it should take longer, but that doesn't mean this is not a time to invest for the long term.
Okay, spoken like an absolute true value investor. Buy when stocks are cheap and hold on to them, and you make money in the long term. Raamdeo, coming to you, where do you stand? Do you think we've seen the worst?
Only after some time we realize whether that was the worst. But I think the kind of pessimism we have gone through, I mean, fundamentals only time will tell, because still a lot of these 6 parameters he talked about still in dogs. So, but I think we have seen some amount of bottoming out of the pessimism, like intense pessimism which we saw, and that led to government also coming back with a lot of steps, and they are committed to do even more. They have literally thrown the fiscal to the same. I mean, people are counting, but I don't think there is any number. So fiscal side is gone. RBI is very proactive on the liquidity, cost of money, whatever is possible. And then finally the number came that 88% decline in the credit flow. I think that is the most scattering statistics you have. So what's happening to that we'll come to know. I don't think it will go worse than that. I mean, I think the pessimism is at a very low level. So when our market is in very, very pessimistic mode, of course it will happen with the evidence of some kind of a slowdown. Slowdown is on. Pessimism is on big time. There are more pessimists than optimists, despite the market is strong, let me tell you. So I think we are somewhere, see, for me it is only a CNBC discussion. You know, what is to be done? I am 100% invested, and I will always remain, you know, fully invested. So whatever money comes, we have to find one or two ideas and buy into that, because we are buying QG, quality and growth.
We have your numbers actually, and you have definitely Focus 25 has beaten Sensex, and your mid cap 30 has beaten the mid cap index trading 12 month. But you know, I don't know whether Naren had an eye on the mail that you sent to us, Manish. He's speaking about small cap, and you have sent us, and we will show that data to you. It may take a little while of a huge number of companies which are over 100 crore market cap, and they have lost 67% from their all-time high. 529 companies you have counted, or 527 companies, over 100 crore market cap and down 67%. What is the message from this table?
So firstly, you should give credit to this came from corporate database. It's not really my data, but thanks to Durgesh Bhai, who keeps bringing out very insightful statistics for us to see. I think the point he is trying to make is that the top 50 companies, as Raamdeo is saying, have taken the bulk of the flows away in the market. Also, another friend sent me some data recently where he said since the norms came out last year about local mutual funds not being able to do style drift between large caps being 25,000 crores, mid caps being 8,000 crores, and then the smaller ones being 3,000 crores. If something falls from 25,000 to 22,000, the fund is forced to in a way sell it rather than adding to its position, and that may have kind of accentuated the pain. So you put these two things together, the carnage which has happened in the broader market is unprecedented, which is why Raamdeo is rightly saying the mood is so pessimistic amongst investors. And I'm guessing a lot of professionals picked up early that what was happening was that in this whole churn being caused by GST and the move towards a more compliant society, it was the winners and the leaders in every sector who were the more compliant ones who are winning market share. And therefore, everyone's portfolios have tilted towards those people, and it includes sectors which normally people would have not touched. For instance, last year, I don't know if you're going to show the data, even in real estate, Godrej or Prestige and others have done incredibly well. So it's not only been the financials or only the consumers. Even sectors like that, the leaders have actually done disproportionately well. And that's really the underlying message, that you cannot have the entire country getting decimated. If indeed the revival has to come, at some point the trade will move away from quality, because again, like Raamdeo and I have often expressed, the markets discount what is the rate of change. So you may go from terrible to bad, and that may give you a rate of change, which is not necessarily the best portfolio to hold long term, but there is a trade over there.
Let's now try and identify what will cause this shift in sentiment, because we've been in a period of extreme pessimism. Some of that pessimism has gone away, but will it turn into optimism, and what is required for that? Naren, let me put that to you. In your assessment, we've seen what the government is doing, RBI is doing, we discussed some of that, but what will cause that fundamental shift in sentiment for people to be wanting to buy stocks, buy assets?
I would say you need the misallocation to slowly come down in real estate. You need people to take a little bit more risk in debt, and you need some animal spirits among the businessmen. And I think the tax concession for new units that was announced is a very, very good step. And I believe we need a much weaker rupee so that exports are incentivized. And I think with these steps we will be through with the problem. I believe that overnight these problems are not going to get resolved. Time will be the biggest healer, and slowly the economy will recover, is my view at this point of time. But we are clearly towards the bottom, and therefore it's a very interesting period for long-term investors.
Okay, Naren, before we get into our first break, give us some ideas to ruminate for Samvat 2076. Which are the sectors or stocks or trends that you are already betting on or will bet on shortly?
Actually, over the last 6 months, we've been saying that essentially you bet on companies and sectors which have delivered no returns for 12 years. Power, telecom, some of the infra spaces, corporate banks. And I mean, increasingly, if you look at from 2017 top, even many of the small caps, other than some quality small caps, have hardly delivered returns. So I believe that you have a wide variety of stocks and sectors which have delivered no returns for 12 years, which I think are looking appetizingly interesting, because if you have not delivered returns for 12 years, no one enters a sector, and therefore incremental competition from new entrants comes down to zero. And many of the existing entrants also wind up and go away. So I believe you can pick up anything which has not done well for 12 years, the sectors. And I think the next 5 to 10 years will be very good. There is a wide number of stocks. It is just that for a fund manager, for an individual to say, I'll bet on a stock which has delivered no returns for 12 years is not so easy. And they have all got good dividend deals also. But that is the challenge at this point of time. The challenge is not finding the ideas, but challenge is having the conviction to buy those ideas.
Yeah, I mean, Naren has given us a very clear-cut framework in terms of how to go about identifying stocks. So same question to both of you as well, gentlemen. Raamdeo, you go first.
You know, see, in a stock market, there are multiple ways of making money. I mean, Naren makes money in one way by being contrarian. I mean, you cannot be more contrarian than in India to say 12 year out of Britain stocks will buy. So,
ICICI, Bharti, all that attest to what he's saying.
So that strategy is very clearly, I mean, I can appreciate it and I get excited about what he's saying. So clearly there is a wisdom in that. But our style is not that. Our style is QGLP. We'll buy quality growth longevity at a reasonable price. So that stays. And maybe we'll make some less money. Clearly, I mean, our style is slightly in favor, right now a lot in favor. So obviously you have to pay a price. But index is also QGLP, let me tell you. Underlying index is broadly QGLP. I have gone through entire 50 companies, except for 3-4 junk. Everything is, I mean, you get scared when you see what you are competing against. Indian index is extremely active. It's not passive. It's very active, and they are made up of well diversified, all the leader companies. In fact, some of the companies which Naren is talking is also there in that. So all the leaders are there of all the businesses, and all of them are profit making, dividend paying. Against that, to compete and beat them, you require a very conscious strategy across the portfolio, and we have decided to stick to our QGLP process. That is what we have done research on, and that is what we understand. That's what we are comfortable with. Time only will tell whether, you know. See, in quality, the issue, quality works in good time as well as bad time. Many of the strategies work only in good time. So we are waiting for good time to come for many of the strategies to work. So I mean, with the public money particularly, I would rather stick with something which works all the time. It's all weather stocks.
Not once in 12 years.
No, not.
I don't think
there is no comment on that. He is buying the performance to be coming up. I mean, 12 years the accumulated fatigue which is there. So
and when that comes, it could be stupendous.
It will blast like all the PSUs, HP, BP, Coal India, all of them. I mean, they are dead for 12 years, and dead means literally death has been put this time. 5-6 P multiple, 7-8-10% dividend yield. So, and now on top of it, government is actually saying that we want to sell. People are so apprehensive about this whole process, whether this process will get completed. That's a...
you know, Raamdeo, you're setting us up very nicely for that discussion on divestment and PSU stocks, but we have to take a break. Those questions to all of you in a minute after this break. Welcome back to Samvat 2076. We've been speaking with three veterans, Manish Chokani, S. Naren of ICICI Pru, and Raamdeo Agrawal. Well, before we went into the break, Raamdeo set us up nicely by saying that you know, the government is thinking of divestment of some big PSU giants who have not delivered for the last 12 years. And Naren pointed out that those that have not delivered for the last 12 years are the ones we should look for. So Manish, that question to you. Is divestment a theme that you will play for Samvat 2076 and beyond?
So let me preface it by saying how an economic cycle starts. You follow those typical 6 phases of any emerging market or economy, where phase 1 there is a small profit opportunity and everyone is skeptical. And if you think back to when you were referring to the Vajpayee government of 2002-3, they started that whole cycle with divestment and privatization. And one company went to Tata, one went to Reliance, one went to Anil Agrawal, and one went to Suzuki, which was the foreigners. And they kind of spread the animal spirits there. And there was a catalyst which came from the world where commodity prices had started taking off. So steel, for example, has started doing incredibly well. That's phase one, but it's met with skepticism because people say this won't last, government, commodities, and so on. Then that profit spreads because the contractors or the beneficiaries of that start seeing it, and then you see widespread earnings growth. And then the mid-cap, small-cap end of the market starts coming in. And then the foreign brokers and all will come out with the new themes that this time is different, BRICS will be the new world engine and so on. And you form an incredible high where we get the, price to infinity kind of stocks coming to market with IPOs and so on, which we saw with power and real estate in 2008. Then you get that sharp sell-off where some market leader or someone gets in trouble, it's unexpected. Then people who are left out, they try and buy back, but the market starts narrowing and it becomes more and more quality.
Yes.
And then interest rates and inflation are peaking, so the RBI starts getting after your case, and then there's a bust. And you come to a situation like we are today, where the government, RBI, investors, bankers, the whole world is jumping at the problem. Money is available, no one wants to lend, no one wants to borrow. It is what we call phase zero. And the catalyst typically starts with a new profit opportunity, which is so easy that you kind of are incredulous that how can it be so easy. And in that vein, I'm happy that finally the government has come back to, what do you call, cell number one, where you have to start fixing the balance sheets and corporate profitability of India. You've busted the balance sheets over the last 7-8 year purge coming from RBI, government, GST, demonetization, whatever, which are all good structural moves, and it's taken a flight to quality. But reality is the corporate sector profits have gone from 7-8% of GDP to like 3%. Whereas in the US, it's gone to closer to 10%. So unless we fix that profit cycle, the tax cuts are a good start. Divestment and privatization will be a necessary second step. The third step will be to find 2-3 sectors which the government starts backing that we want to create a profit over here. Illustratively, I'll give you an example. Textile industry, for instance, in India is a very large employer. We have 3% global market share at a time when our currency has collapsed. We were 6 to the yuan in 2008. We are probably close to 11. With that level of depreciation, if our exports haven't gone up, I don't know what people want. That will the rupee go to 100 and miraculously exports will go up? I don't know. Bangladesh and Vietnam market share in textile is double that of India. They are 6%. Turkey is equal to India. And we have everything going. Then tourism. If you want to create employment, you want to create profit opportunity, the government has to choose what sectors it wants to go after and create that. So I'm glad privatization has come. And having said that, BPCL I think last year ran up, 80%? In anticipation of this. It's up Diwali to Diwali, I think 80%, and he was tipping at last Diwali. So there's a lot more room. Most PSUs are down between 65 to 80%. The aggregate market cap of PSUs is barely 10 lakh crores. And if you say disinvestment is 1 lakh every year, and assuming government would not sell more than 51%, it pretty much in 2-3 years we're out of disinvestment targets. So privatization is inevitable. We have to do it. And once this starts coming in, I would not be surprised if these valuations themselves become 2x or 3x, because they have indeed fallen from those highs. And that's directionally, what's giving you hope, that these will start also being seen as quality. Like even BPCL figures in his portfolio. It is quality. Just because it's a PSU doesn't mean you write it off. So, and there are enough examples like that.
Naren, you alluded to this debate as well. When the private sector and individual corporates make mistakes of capital allocation and the like, how do the governments come in for the greater good? You alluded to that problem. Do you have an idea in mind what the government should do in that regard, fixing a sector or two?
We would want to see more closures of all the old problems through the bankruptcy code quickly, along with the real estate deleveraging that needs to happen in central Bombay and Delhi and Noida and Gurgaon. I think if these two happen, that itself pushes the economy from whatever growth we have now by 1.5%. And then after that, we have to decide which are the areas where we need to take leadership, like government seems to be taking some steps in electric vehicles, for example. I think there is a massive opportunity in healthcare services at this point of time, given that the world is becoming much older. and requires healthcare services at a cheap cost. And like what we did in IT services, there is potential in healthcare services. So I believe that we have to identify 3-4 areas, and I think Manish very well spoke about areas like textile, leather, aquaculture, all the areas where there is some amount of employment possibility along with exports. I think that those are all superb areas as well, agriculture as well.
Raamdeo, what's your take on the world of finance itself? Would you already buy, just crystal gaze for Samvat 2076?
Let me just put why we are in finance sector. I must say 25-30% of our portfolio even today is in finance sector. Why?
HDFC Bank?
Yeah, of course, led by that. So, one of the things is that credit intensity in the economy, which is about 70% of the GDP. So 200 lakh crores of GDP, the outstanding credit must be about 140-150 lakh crores. But world over, what happens is the next 3 trillion will have a significantly higher credit intensity. So if the credit flow is not there, there is no GDP. You can make it 100%, minus 100%, and there is no GDP growth. It's that kind of thing. Yes. It's just one-to-one correlation. So it is a tower of credit.
Absolutely.
So my sense is that we will go to 3 trillion. We wrote about this $1 trillion economy in 2008. So we are watching it for last 10 years. It will go to 6 trillion and it will go to 12 also. But let's talk about the 6. And this will happen by 26, 27. Now, when this happens, you will need about 200 to 250 lakh crores of credit to be underwritten in next 6-7 years. Now you tell me, I mean,
how can you not bet on finance?
No. And second, which are the institutions? Yeah. PSU banks, they have, what performance has been, and I don't see significantly improving. Whatever they do, consolidation, EAO. Second, NBFC, which was the real discovery of last 10 years. They started really delivering last mile and everything. Even that has gone haywire. So at least it will take some time for it to come back again. So my sense is all these credit delivery institutions, 4, 5, 6 banks, whatever is there, I think they are going to have lenders, it's a lender's market where you'll have liability cost on their side, lending lending price will be their price, operating cost will be low because digital and other things are happening, cost to income is continuously falling. So we won't be surprised in 5 years time you'll have the highest NIMs for this institution, not 4.3, 4.4, but closer to 4.7, 4.8 unless something dramatically changes.
Okay. Manish?
No, I completely support that, and it's as the economy will get more and more financialized, and I recall last year even we spoke about private banks, we spoke about asset management companies which have done incredibly well, we spoke about life insurance which has also done very well. Thematically, it's a no-brainer to be in this space, and like he rightly said, it's kind of becoming a winner-take-all, because the weaker ones or the less capable managements or the less compliant managements are all falling by the wayside. And it seems strange to me that a $3 trillion country will not have a $100 billion bank. HDFC is not yet $100 billion. And surely that will be the largest market cap bank. Well, it is already, I mean, it will be the largest market cap company of India going ahead. And each time someone says, this is the next HDFC bank, we both, I think quietly, we just go and buy some more of HDFC bank. Because there's no use reinventing the wheel when there's such a long runway ahead of you. Okay, similarly for asset management companies, life insurance and so on.
Okay, we want to wind up with a monosyllabic answer from all of you. Tell us one sector or one stock. Naren, you go first. The stock or the sector, in your case I guess it will be sector, for 2076, Samvat.
I think pharma and power would be two sectors which we really like, both for the medium term and long term.
आप तो stock बोल दो.
Stocks नहीं बोलेंगे. अच्छा. Stocks नहीं बोलेंगे, लेकिन I think clearly there is opportunity in, as I said, selectively in all segments of financials, private financials, but the winners. Let me tell you, whether it is insurance, whether it is private insurance, whether it is LIC, GIC. Banks, NBFCs, HFCs, all the segments will be, but you got to bet on the right ones. Consolidation will happen, and probably consolidation is for real.
Manish?
I would agree with that. So, I mean, financials looks still the no-brainer, and I will add an element of fun for you. I think you cannot have 50% of India's media sector with 50% of eyeballs in aggregate available at $6 or $7 billion. So I leave that thought with you.
Okay, that's a very mouth-watering one, considering that you're on the board of one of them. Gentlemen, thank you very much and have a great Samvat 2076.